Hello from Hong Kong and welcome to this week's market update. The virus continues to dominate the news this week. Markets, though, generally continue to look past this and see 6 months ahead. Now, if we do the same, it's realistic to assume that in 6 months' time a vaccine will be being rolled out. Add to that improving weather conditions in the Northern Hemisphere as we approach summer, and the likelihood that a US stimulus plan will unlock at least another $1 trillion, and we have low interest rates, you can understand why stocks continue to do well. In vaccine news, AstraZeneca released more details of its stage 2 trials on Thursday, which outlined the vaccine is effective in treating people over the age of 65. Now we await the final stage 3 data, which should be released before Christmas. With Thanksgiving in the United States and the start of the holiday season, we will see a predictable sharp rise in COVID cases, followed by hysterical headlines. Now in the short term, this may cause markets to be turbulent. We would again encourage that the focus continues to be on the emergence from COVID as we enter 2021. New lockdowns will undoubtedly drive more holiday spending online, and retailers without a strong online presence will miss out from the most important selling season. We may also see a capacity crunch as online shopping spikes, with parcel delivery firms such as FedEx and UPS unable to cope, so get that Christmas shopping done early. The UK will phase out the sale of new petrol and diesel cars by 2030, 10 years earlier than planned, as it steps up its plans to become a beacon for sustainability in its pivot away from the European Union. The Green Industrial Revolution is ambitious, and the government will spend £12 billion to support it. The UK will also introduce carbon disclosure and labelling requirements for all businesses. And the next stage will be for the establishment of a carbon price, so that market forces will further incentivize companies to pursue green and sustainable strategies. The US dollar continues to weaken against most major currencies this week on the back of positive vaccine news, offsetting the rise in virus cases. Demand for US dollars is likely to continue to weaken during 2021 as a risk-on mentality becomes more entrenched. This should be supportive to emerging markets, making it cheaper for them to service US dollar debt. That's all for this week's market update. I will see you all again next week.